Good morning. This is Stock Market Today, hosted or brought to you by Chaikin Analytics. This is Nick Webb. I'm in for Dan Russo, who's out on honeymoon. Down below, you see Dan Russo's Twitter handle. Definitely worth a follow. Anyway, that's not really relevant. What is relevant is where's the market? So it started out very fast yesterday and then faded throughout the day. It got early good news from Steve Mnuchin, who said the trade deal was 90% through and just needed some fine tuning, and that gave a lot of hope for the Trump-Xi meeting, and so the market really reacted positively, particularly the technology stocks, which had a very nice earnings report from Micron, so there was a lot of tailwinds in that sector already, but they're one of the most affected sectors of the China trade issue. So naturally, they had the biggest gain coming out of the gate. Throughout the day, though, it began to fade, and it ended up almost flat for the day. We're seeing the S&P continue to trade in a narrow range while looking for more direction from some of the big items that are out there, whether it's earnings season or trade or any other catalyst. So support right now is at 28.75. It's bounced off that number a couple times. And resistance right now at the top is around 29.50. Again, sort of hit that a couple times, and that seems to be a very logical resistance point. So for them to break either direction, they're going to need some more news. We already talked about Steve Mnuchin. That was a catalyst in the morning, and I think it faded away as the day went on. Durable goods order was a concern. It's down 1.3% sequentially. That's largely due to Boeing's 737 MAX problem. Not only does that impact Boeing, but it also impacts all of the suppliers. So there's quite a downstream impact on that. Also, it impacted, they were just at the Paris Air Show and didn't get as many orders as they normally would, and that's because of this whole 737 MAX issue. Earnings reports are driving big price impacts right now, both on the positive side as well as the negative side. You'll see some of that later on in this session. Energy and technology stocks or sectors were the big winners yesterday. They had a very good day. On the flip side, real estate continues to be a little bit of a problem area. Utility stocks is a problem area, and healthcare is a problem area. So there's some downsides in this market as well right now. As we stand right now, and I always hate this, the futures markets look like they're going to start off with a decent, solid market open. That is subject to change. We're recording this at about 7:45 right now in the morning, and there's a lot of time where things can happen between now and then. You can see over on the major indices, the Dow basically was flat, S&P was flat, NASDAQ, obviously the tech, very heavily influenced by tech stocks, they had a 0.5% gain. Small caps basically flat. Bonds were down a little bit. Energy had a big day yesterday, up 1.5%. This continues. They've had a little run here in terms of bouncing back from really a moribund performance in the first half of the year. So let's take a look at that sector movement. You can see energy is right on top. Had a good day yesterday. And literally, I think the oil price rise that's been going on recently has contributed to this. And, again, depending on what happens in Iran, with the US and Iran, that could have a big impact on oil prices, which then would have a follow-on effect for the energy companies. Over on the other side, you can see that both real estate and utilities pretty much, utilities are a defensive stock, healthcare is a defensive stock, staples is a defensive stock. Those sectors did not do well. Real estate is not really a defensive stock, but really's had a bad run recently. Our industry focus today, and again, this just rotates through, this is not a positive or a negative, is the biotech sector. And you can see, by and large, this is not one of our better subsectors or industries. We only rate 13 bullish or very bullish companies, and we rate 38 bearish or very bearish companies. So that ratio of bullish to bearish is not particularly strong in this industry. As a matter of fact, it's pretty weak. And you'll begin to get a sense for why as we go next to the next slide. This is what I call the lottery ticket industry, where you can lose a lot of money in this industry, and then all of a sudden one of them just hits on a discovery that's commercialized, and they just make a ton of money. But let's take a look at one of these stocks, and this will give you an idea. Here's Neurocrine, which was from the other slide. You could see it was very bearish. Let's just walk through it the way that Chaikin normally walks through it. Then I've got a couple additional things I want to bring out on it. It's very bearish. So not just bearish, very bearish. And you can see it's been very bearish for a long time. The long-term trend is down. It's trading below its long-term trend. Strangely, there's good Chaikin money flow, but again, let's read it the way that we normally do. So very bearish, consistently very bearish rating. Relative strength has been, it's underperformed the market for quite some time. And then I go to money flow. So something's going on with this money flow. You can see where money flow came in the past. It had a short-term gain, here and here. So the fact that you've got institutional money flowing into a stock does cause some issues. But here's where I wanted to show you why biotech is called the lottery ticket industry. These are the subcategories of the power gauge rating. You can see we break it into financials. What's the financial picture? Very bearish. That means it's got a lot of long-term debt, probably doesn't have a lot of free cash flow to service that. It's not a healthy stock in that regard. Earnings, again, bearish. Technicals, bearish. Experts, there's nothing that indicates anything's going to change in this stock. Now come over to this part of to the right-hand side, and you sort of see some of the fundamentals. What I wanted to talk about just really briefly is look at the revenue. They bring in $500 million, but their market capitalization is over $7 billion. That means you're paying $14 for every dollar of revenue. And, it's just not sustainable. So something has to change. They need to hit on that discovery. They need to get more drugs into the commercial pipeline. Because this is a stock that's way overvalued unless they start having some seriously better results. So again, it's a lottery ticket. You're holding this company on the belief that one of their discoveries will absolutely hit. Our stock of the day today is Century Communities. It's very bullish. It's a construction building supply company. Again, let's just take a look at it. You can see over on the left the components that make up the power gauge, financials and earnings. We like those to be bullish, and we like the experts to be bullish. Right now it's in sort of a technical slump. Might be interesting to wait until some of the technicals turn around a little bit if you were ever thinking about investing in this company. It's not a big one though. This is a small to mid cap-ish kind of company. It's got 764 million in market cap. So, this is not for the faint of heart. You can see we rate it very bullish. We've been very bullish on it all year pretty much. And that faith has been rewarded in a reasonably good uptick. It's trading still just barely above its long-term trend line. Now, if you read it, very bullish, good relative strength. However, money flow looks a little weak right now. That means that most likely when it hit this area here and maybe over here, Smart money started taking the opportunity to sell into that and take their profits. And they're probably waiting for it to settle back down into, in the 22 range before they establish positions again. So you can sort of see that the smart money has flowed in and out of this and that's driven some of the stock price movement. So interesting company. As we talked about, Micron had a huge day yesterday. It was up 13%. They're the big gainer of the day. In sympathy with them is Western Digital. I don't think they had much news yesterday. They signed some sort of partnership, but in general, I think they're moving in alignment with Micron. I'm going to skip over CTVA announced they were going to do $1 billion share repurchase. Marathon Petroleum, it's more interesting. They had one of their competitors had a massive explosion in Philadelphia. It's a gasoline refining plant. And Marathon Petroleum is going to benefit from that because they have some of the nearest refineries, and they'll be able to hopefully boost up their operating rhythm and get some additional profits out of that. So very interesting. IHS Market, which rounds out the gainers, they had a great earnings report, so good to see from them. Long time ago, I worked for a small little company called DRI, which has been gobbled up by IHS in there. So I have a warm spot for them. On the right-hand side, General Mills, they actually, it wasn't a ridiculously bad earnings report, but they got hammered. It's like they forgot their Wheaties. Right out of the gate, they gapped down almost 8%. So they clawed back and ended up only down 4.5%. Energy, they got caught in that utilities downdraft. Nectar Therapies, again, drugs are also under pressure because of the Democratic debates bringing up the healthcare costs and in particular drug costs. So they were sort of caught in that crosswind. Smuckers looks like they went down in sympathy with General Mills. And then Fed Realty, which is an interesting looking company, actually went down in the whole real estate flames. And so that's what happened there. So if you look at it, this is sort of a microcosm of what happened to the market. The tech stocks did great. The real estate, drugs, and utilities just really had a hard time yesterday. So we've got, we talked about IHS Market's beat. It was a nice one, 10% beat. General Mills, like I said, the earnings report was not terrible on the earnings line. The revenue line was weak. Margin line was pretty solid. So it wasn't all bad news. And Paychex got hammered. They missed earnings. And when you realize how much the estimates have come down over the last couple of months, if a stock still misses the estimates, then the market's really going to respond. And it's not going to be pleasant. And that was the case for Paychex. Today, we've got, a few more reporting. The big one is after the close, and that'll be interesting to see because apparel companies have not been doing well, but Nike sort of is often sort of going at their own pace. They have different fundamentals. Anyway, Nike's going to report after the close, so it'll be interesting to see how that comes out. I'm going to be watching that one closely, and I'm sure we'll talk about it tomorrow. So just a couple extra bonus slides. I wanted to bring up the CNN Fear and Greed Index. They do a wonderful job. It captures where the market is. And you can see, look, this is a market. If you think about the S&P, they're up double digits. They're up, 17, 18% for the year. They're having a terrific year. And we're still in the extreme fear. So it hasn't shifted into greed yet, which is surprising. So there's money on the sidelines. And that's mimicked with our survey questions when we do a webinar. A lot of money on the sidelines there too. And you can see it. Here's a couple of them where, do you make money during the earnings season? No, 51% stay on the sidelines. Are you cautious? Yes. That's what we're seeing in the market. Have a great Thursday. We'll be back on Friday.